Okay, welcome everybody. I'd like to welcome everybody to the Semi-Automated Algorithmic Trading webinar. This is an official webinar I'm doing, and I will be highlighting NinjaTrader and TradingView platforms in this webinar. This is a bit different than what I've done before. I haven't done a webinar like this being these semi-automated strategies. So we're going to get started with that. I'd like to go over, kind of briefly what this means. It means really we're leveraging the power of the MBoxWave algorithms. And I've set it up in a way that this is actually a new feature that I've implemented recently over the course of the last year. And I haven't really shown how to use it. And the goal for this is to be notified of potential setups, so you're not staring at the screen all day. You take the emotion out of trading and you make more objective trading decisions. That's exactly what the goal is. All right. So let's get onto the question. What does semi-automated trading mean? Well, the goal is, to set alerts and not to have to watch the monitor all day or every day. So if you're swing trading, it could be, once every few days, okay? Or if you're day trading, it could be when there's a good setup, be alerted to take a look, right? Rather than waiting for the setups to happen and, becomes kind of brain overload sometimes when you're staring at the screens all day. So you'll be notified when there's a potentially good trading setup. Once the alert notification is received, you check the chart and do a quick analysis. So that's why it's a semi-automated, because it still requires checking the chart and making a decision, setting your reward and your risk. So briefly, the mechanisms for setting up NinjaTrader alerts, we'll use chart alerts, market analyzer, Bloodhound. The algorithmic signals are now 100% supported by Bloodhound. In the past, they were not. So that is a new feature. I'll touch briefly on the extensive API for programmers. And then for TradingView, for the TradingView versions, we're going to also go over the chart alerts, server-side alerts, because the alerts continue working even if you close your charts. That's what's nice about the TradingView version. You can get alerts on your phone, tablet, PC, etc., and also how to scan for alerts. Okay, so let's talk about what are these, one second, what are these algorithms that we're using? So previously, we had these algorithms in MBoxWave, and people know about it. We have the buy, sell, imbalance, three stooges, effort, result, pullbacks, and springs, and upthrusts. What's new are these combo algorithms. Right? It's when we combine certain algorithms together. When you have a buy, sell, imbalance and a stooges, buy, sell, imbalance with a pullback, buy, sell, imbalance with springs, or stooges with a pullback, stooges with spring or upthrust, and double algorithm, and then triple algorithm. So I know I'm mouthing off a lot for people that are new to this. Maybe it's a little vague, but I'm going to get right into it, what this means exactly. We'll be able to set alerts easily on any single or the combo algorithms. So the combo algorithms really are where the power is, because we have multiple algorithms firing off at once. That's when we want to be alerted, especially the triple algorithm. That's quite powerful. So the double algorithm is any two single algorithms firing off, and the triple algorithm is any three of these single algorithms firing off. Let's go to the next slide. All right, so what are the single algorithms? Buy, sell, imbalances. So these happen in the waves, okay, going up and down. For those that are new to MBoxWave, the waves up and down, that's the Gann swing. The numbers on the wave are showing supply and demand. I'll go into some examples a bit later. And so basically, when we see a positive number and prices going up, that's what we expect, right? Imbalance occurs, the buy imbalance occurs when you have a positive number when price is going down, or you have a negative number when price is going up, right? So it means that even though price went up here, there was more selling. Even though price went down here, there was more buying, right? And it kind of, price springs off into the direction that the buying or the selling is. Okay, so in this case, it's minus 78, price goes down, plus 51, price goes up. Next, the Three Stooges. Three Stooges is the numbers on the in this case, we're looking at the down waves in this example, and the numbers are increasing, becoming less negative consecutively. 3 in a row. So when that happens, you see minus 369, minus 116, minus 106, we get an algo firing off here. And this minus 18, that's 4 consecutive, but it looks at the 3 consecutive, so this fires off, and this is in brackets, meaning it's in a trend, right? Higher highs, higher lows. Pullback algorithm is we're searching for corrections. And here price went down, we have a pullback, algorithm fired off, we had another pullback in a trend. Since it's a brackets, algo fires off. Then we have the springs and the upthrusts. It's basically we're searching for tops and bottoms. So I'm going to actually go over an example because springs and upthrusts can be tricky to trade, but I'm going to show how to do that. Basically, price, springs up after a spring, after an upthrust, goes down. All right, so next slide. So the combo algorithms, this is where, a lot of the power is when we have combination of algorithms. They're generally stronger and more reliable setups, a lot more reliable than the single algorithms. And so this is what the basis of this webinar is. It's these combination algorithms and being able to set alerts on them. That is where the true power of the MBoxWave algorithms is. Here we have a sell imbalance and a pullback, so a minus 26 and a pullback. Price goes down. Here we have a buy imbalance plus a Stooges. Remember, Stooges is 3 consecutive. Here it's increasing, becoming less negative, and here it's actually positive. So we have a buy imbalance and a Stooges. Here we have a pullback and a Stooges, right? So here was just a single pullback. Here's a pullback and a Stooges, right? So that's going to be more reliable than just a pullback. Here we have a Stooges and a spring. Again, 3 consecutive, becoming less negative, and a spring, price springs up. Here we have an upthrust and a Stooges, same as this, but the opposite, price goes down. And here we have 2 triple algorithms in a trend, right, where we have buy imbalance, Stooges, pullback, buy imbalance, 19, Stooges, pullback, and the brackets mean that we're in a trend. So that's one of the, basically Hail Marys of these combos is the triple algorithm, right? So I'm going to go into some examples shortly. What I wanted to touch up on is, the difference. People ask, what's the difference between the NinjaTrader version and the TradingView version? I'm showing these 2 charts side by side. There is no difference, okay? If you look at the numbers on the waves, they match the numbers on the waves. The algorithms match. The histograms match. TradingView, you see a little more noise here. Here you just see boxes. It's just in the way that the boxes are drawn is differently. It's done differently than the NinjaTrader version. So that's why there's a little bit of noise. But the level of the boxes are identical to the level of the boxes in the TradingView version. The M cumulative delta, exactly the same. NinjaTrader and TradingView. X-Pace, same in NinjaTrader as in TradingView. So, it doesn't matter which platform you choose. You're going to get the same analysis on the charts. And since in this webinar I'm focusing on NinjaTrader 8, I just wanted to show everything that I'm showing now is going to apply to the TradingView version as well. And not only to the TradingView version, also to Sierra chart, but I don't really talk about that much. I don't really talk about that in this webinar. Let's go forward. All right, so here I'm showing an example of a triple algo alert with a trend filter on Bitcoin daily over the course of the past year. What I'm trying to show here is that in this example, we can skip watching the charts, right? If we set the alert or market analyzer or the TradingView alerts notification for a triple algo in a trend, it's going to fire off here. So for the entire year, there was no alert, right? So if we are swing trading, long-term trading crypto, Bitcoin, and we set a triple algo on Bitcoin, it would only fire off once over the course of the entire last year, right? So that's pretty powerful. We'd get the signal right here on this plus 172 buy imbalance, stooges, and pullback. That's a triple algorithm. It only fire off once. So what happens is once we get the alert, right? Let's say we got the alert. What do? Because this is semi-automated strategies. So we got the alert. That tells us we need to look at the chart. So let's look at the next slide. So once the alert triggers, do you take the trade? To answer the question, you check the confluence. Okay, so here I'm stating that the analysis is objective. It's overwhelmingly bullish, nothing bearish. This is not even subjective analysis, right? We are looking, does the trade make sense or does it not make sense? So we got the triple algorithm. Before that, we had a buy imbalance right here, so that supports a bullish position. We have two total X control dots here. These dots that are drawn here. For those that are new, this is showing who's in control, the bids or the offers. And I talked about it in a previous webinar extensively and also in my live trade videos. So just for those that are new, the dots mean that it's who's in control in terms of the speed of the bids or the offers. So we got two double total offer control dots. And then we see the MBox histogram. So we see selling exhaustion, we see buying expansion. Excellent. We see a crossover from distribution to accumulation. Perfect. We see here diminished sellers. It's just a tiny blurb of a thing. It went from here to here. And we see that the pace of offers are in control in the X space. Okay, so we've made that objective analysis after we got that alert. So what do? How do we take the trade? So right here we had this triple algorithm. We'd place the stop at the low of the bar. And around here would probably be our price and point of entry. We'd get in, and then we'd have to monitor the trade. Since this is a daily, each candle is a day, right? So you could set a risk reward. You could set a 1 to 3. You could have done that. But if you set a 1 to 3, you'd make about this much profit, right? So it's up to you how you want to manage the risk. But if you want to manage the trade and exit on a change of technical analysis, here's what I would say. The exit strategies. So either you hit your risk reward, you exit at the congestion zone, this becomes congested. You exit at 3 at total bid control. We had a total bid control, so there's a change here where bids get some steam. Or we get a decline in buyers. Okay. So of course we'd want to write it up to here, but realistically, once it becomes congested, that's a good exit spot. Or we get a decline in buyers. Previous slide, let's check that. So if you wait here, you see that the buying here in the cumulative delta is expanding, and then it drops here. We have a decline in buying. That's also cues for an exit. So there's many ways we can exit here, and it's quite flexible. Okay, so what I want to talk about is how easy it is to set these alerts. Okay, so the triple algo example with Bitcoin, very easy. You would right-click the chart and click alerts in NinjaTrader. You'd set rearm type to on bar close. You'd click add button here. Then under the conditions, you would set triple algorithm, right? You make sure the Gann swing is selected. That's where the algorithms are. Bars ago needs to be 0. So as soon as it happens, you're notified about the alert. Set it to triple algo. And as you can see, we support all these combination algorithms, which I'm going to get to in a second. Then it needs to be not equal to numeric value 0. That means it's going to fire off on any triple algorithms, right? If you wanted just to go for long triple algorithm, this would be a 1. For short, it would be a -1. I have a slide about that as well. So these are basically acronyms for the combo algorithms, right? So if you see, for example, 3S delta, that's the single algorithm, 3 stooges, okay? Pullbacks is the effort result pullbacks. SPUT is the spring upthrust. BSI is the buy sell imbalance. BSI plus PB, that's buy sell imbalance plus pullback, and so forth. Okay, it's all spelled out here. Then we got the double algorithm and the triple algorithm. I did in red because that's a juicy one. So you set that, and that's it. You wait until you're notified, right? You can do a sound notification. You can do an email. There's different ways you can get notified in NinjaTrader. How do you scan for a market analyzer? Say you want to add 20, 30 stocks, or you're day trading and you just want to see the market analyzer to see if there's a triple algo active or any of the other combination algorithms. You'd open the market analyzer. Under columns, you double click indicator. Indicator, you'd select MGAN swing, the plot, triple algo, or any of the other algorithms or combo algos. Data series time frame, you need to change to what time frame you want. So if you expand this, it defaults to 1 minute. You can change to daily or whatever. I changed the label to triple algo, so that's what shows up in the columns, and you'll see the triple algo right here. So here's an example of it. Here's 0, meaning there's no triple algo firing off. It will become 1 or -1 when the triple algo fires. 1 for triple algo long, -1 for short. So that's what I was talking about. 1 for long, -1 for short. And, you can scan for either of those at the same time. So next, I want to show how do you do this in TradingView. It's really easy in TradingView. In TradingView, you would load the MBox algos indicators, so the algorithms are separate from the GAN swing in TradingView. It's just the way the TradingView version works, but you get all the same stuff. It's spelled out here, instead of using acronyms, because in the TradingView version we can have these longer labels, which is nice. You right-click the chart, click Add Alert, set condition to MBox algos, and then to condition MBox algos, select triple algo or any of the other algorithms. And you click Create. That's it. Really easy. You create it on the chart that you want, right? And here I spell out the single and the combo algorithms, and basically your device computer can be off and you'll still get notified on your phone or wherever you want to be notified. So that's really nice. You can also do scanning for alerts similar to NinjaTrader's market analyzer in TradingView. You just add as many alert conditions as you want. You can view a full list. For example, here I added like 3 stooges plus springs on the Euro USD 4 hours, double algo on the Bitcoin 1 day, buy sell imbalance plus pullback on ES 1 hour, and a triple algo on NASDAQ 1 minute. And so once you set your alerts, you'll be notified. You'll just be notified, even if your device is off. So it's basically, in the TradingView, it's scanning for you all the time. As long as the alert shows active here in green. You can also inactivate it if you don't want it to fire off. But they're always on. So that's the way to achieve scanning for alerts in the TradingView version. Very nice and very convenient. So let's go through some more examples now. I'm going to talk about a springs upthrust counter trend strategy, right? And let me just show briefly a chart. So springs upthrusts are counter trend in nature, right? We're looking for tops and bottoms. So this is using a counter trend filter. And in this chart, we have 3 potential trades, right? Upthrust here, a spring here, and a spring here. So I'm going to talk about analysis on all those 3. Say we are day trading here. We've got the MNQ, right? Micro NASDAQ 1 minute. And say, we want to trade springs upthrusts using counter trend filter, and that's all we want to trade for today, right? We would get the 3 alerts, right? And so if we manage the analysis well, we'll do good trades. So what are the 3 possibilities? So When we see the spring upthrust, either we have a change in market behavior, start of a new trend, right? We need overwhelming confluence for the bulls or bears, and the technical analysis needs to line up. If this is the case, we let the trade ride, maximize reward. If it's more of a counter trend, meaning that selling is exhausted but demand buying has not come in, or vice versa yet, then we're going to scalp out some profits for a fast trade. In the third case, it's a do-nothing trade, right? If it's a spring but analysis is still bearish, we do nothing. If it's an upthrust but analysis is bullish, we do nothing, right? So let's take a look at this. So first example is this upthrust. So instead of distracting everything on the chart, let's go by these points 1 through 6. Here is an example of the number 1 example here, the change in market behavior trade. Okay, that's this. Supply expands, right? Minus 179, we see we go from minus 75 to minus 179, it expands. Check. Selling expands. We see in the histogram, expansion of selling, expansion of distribution, even though it may not look huge, it's still expanding. That's what's important. Demand decreases, okay? We went from 192 to 188. We have a higher high and less demand divergence, meaning we have a higher high but less demand, right? Remember, we are catching tops and bottoms here, so we need to look at the fine points of details here to make a good trading decision. So even though this 188 and it's not a whole lot less, it still is less, and it made a higher high. At the same time, buying contracts. Right here, decrease in buying. It decreased. And here in the cumulative delta, it also decreased, right? And at the start of this bar, we have X control of bids, and we have X pace bid domination here, and the upthrust. So this is the beginning of the down move here, right? So we're catching the top here. So we have to notice, sometimes it's more obvious when buying contracts, or selling expands. It is here. It's just not as obvious because we're catching the move at the beginning of the trend. But if we pay attention, we can catch the details. So, if we get in here, put your stop above the swing or the high of this bar, let the trade ride, right? Since we had a change in behavior, the goal is to maximize profits, let the trade ride. What does that mean? Well, as you see here, selling eventually becomes exhausted on lower lows, and it's a natural exit based on a change in technical analysis, right? That's that. This one is more of a counter trend trade because not everything lines up, right? Let's go through the points. Pros: selling contracts, right here, selling contracts. 2, overall selling exhausted, here. 3, plus 38 buy imbalance, no supply, and a spring. Okay, this is actually a double algorithm, right? But we weren't scanning, we were just scanning for springs and upthrusts, but this would fly for the double algorithm, right? But what are the cons? We don't have a sign of demand. Look at this, 83.41, demand looks small. And we don't really have any sign of buying. Look at the sign of buying right here, right? So the analysis is mixed, right? So if one was to take this trade, you'd scalp out, part of this move here, right? It's not overwhelming evidence that everything's in our side because we don't have the demand to back it up. So we're not going to aim for a huge reward here. Or we could skip the trade, all right? If we compare to here, everything more or less lines up for the short position here. Half of things line up for the long position. So I'm just showing you how you would interpret this alert. Next one was the do nothing trade, because this is important. I have to show you when not to take trades, right? Because indicators and algorithms aren't perfect, right? We still need the brain to determine when to take a trade. So let's look at this. at these points. One, selling is still expanding, right? Right here, selling is still expanding. So, you don't really want to take this long position. Selling is still expanding. Overall selling grows. Right here, overall selling is growing. We have a drop in demand, so there's nothing really bullish about it. We went from 188 to 97. There's nothing really bullish about this spring, so we're not going to go up. Bank on an up move. X pace, our bids are in control. Look right here, X pace bids are dominating. We have no X control of the offers, no blue or teal dot here showing that offers are in control. We are overly bearish. It's a do nothing position, right? So it's important to be able to look at a setup and determine, is it, high probability, potentially good move up or down? Is it a mixed one, like this, where, half of the points line up? Or in this case, none of the points line up. You would do nothing with this trade. All right. So now I want to talk about more exciting examples of the combination algorithms. Here we're going to talk about the buy, sell, imbalance plus pullback trend strategy. This is a very, very good combo algorithm. I like this one. Either we have a trend trade, strong demand and price rising, and vice versa with supply, ride the trend, maximize rewards, or do nothing. Do nothing, meaning if we have a long pullback, but it's bearish analysis, we do nothing. Or if short pullback, analysis bullish, we do nothing. So let's look at this. All right, so in this is Amazon, right? Say we were swing trading or long-term trading stocks. We set alerts on the buy imbalance plus pullback over the last year. Okay? So this is actually very exciting here. I'm using also a trend filter. The NinjaTrader plot name was BSI plus PB, buy, sell, imbalance plus pullback. So we would be notified 2 times over the course of the last year. So the first one would be here, the 38 plus the pullback, and the second time would be the 110 plus the pullback here. Right? So I'm going to go over both these examples. Ideally, we would want to take the first trade here on this setup, and we would want to avoid the second one here. Right? So it only brings us to the charts 2 times over the last year. That's not a whole lot of work. All right, so let's see. After this double algorithm fires off, what do we see? All right, there's a lot of stuff on the chart. Let's go through the points here, 1 through 6, make it really easy. Number 1, demand expands. Right here we see 209, 242, 209, 242, right before this combo algorithm. Buying expands. Look at this nice histogram. Buying is expanding. 3, no selling. No selling in the MBox histogram. We also see overall buying grown is accumulation. There's no distribution. Next, 4, supply is weak. Right? Minus 15, minus 51. This shows weak supply compared to the demand, comparing to a 209, 242. These are weak numbers. We have a strong offer of pace. We see that the pace of offers we're outpacing in general. We have a total control of the offer dot right here. And we've got our plus 38 buy imbalance and pullback signal. And if you didn't get in the trade here, the 0 here, next swing down shows no supply. So basically, if you saw this combination algorithm, we did this objective analysis. This isn't really subjective. It's like in our face that it's really, really good. Right? Really, really good analysis. And we get in, we write out the trade. You can go again, you can set a risk reward, 1 to 3, 1 to 2, 1 to 4, whatever you're comfortable with. If you want to write it out until buying is exhausted, I'm showing here in this box, buying is exhausted, signals exit of all positions. Right? If you didn't wait until here, you could see there's a drop of buying already here. This area is also congestion zone, possibility for exits as well. All right. But that's a good trade. Very good trade. Second example of the combo algorithm, right? Since indicators algorithms aren't perfect, we're going to need to look at the screen and decide, are we taking the trade or not? In this example, we're taking the trade. In this example, we're not. So what are the points? 1, weak or no demand, right here. 76.39. These are not good numbers. I don't like these numbers here that I'm seeing with this algorithm here, right? We had these, remember, 209, 242, then it started to decrease. 192, 156, 148, 73, 76.39. It doesn't look good, Next one, no expansion of buying. Right here, it's kind of, we had this blurb up. Where it gapped up, we had a spike of buying here, but it just doesn't look strong here. The Q and delta, we see buying contracts, buying is exhausted here. If you look where the signal occurs and you just go down right here, you look at this right here, it doesn't look good, right? It's just as objective as it gets. We see that the bids are outpacing the offers here. There's just no basis for a long trade, right? So in this case situation, we caught a really great setup here and a do nothing setup here. For our semi-automated strategies, we do really good on this trade, on the first one. All right. Now I'm going to talk about double algorithms, right? So double algorithms were any two and I want to go back to this slide. Double algorithm here were any two of these single algorithms, all right? Any two of these at the same time. Right, so if the setup has confluence, where everything lines up, we enter the trade and try to maximize the reward. If we see the algorithm, but the trend is exhausted or the confluence is weak, we do nothing. So let's get into it. So I wanted to show a different kind of example here because, some people like day trading, so I show minute charts, I show swing trading, daily charts, now I'm going to show a tick chart. Some people like tick charts. Personally, I'm really more of a day trader. I use minute charts, time frame charts, but this is a tick chart example. Sometimes people ask, does MBoxWave work with tick charts? Yes, it works with tick charts, works with range charts, works with Renko. I've showed Renko examples before and also in the last year's webinar. Not last year's, 2022. Anyway, this is ES1000 tick chart. And we have two potential trades. We're using smart filter. All right, smart filter, basically, we're looking for trades that are in a trend or in a counter trend once the trend has weakened or once the trend is not as strong. So the first example, this fits the criteria of being in a trend, this pullback and minus 54 sell imbalance. This one, since we've been in a downtrend technically, this is still in a downtrend, but the smart filter will fire off this algorithm because the trend has weakened. And potentially we can reverse. And so this is our long trade counter trend. So I wanted to say this. I'm showing an afternoon chart here, right? 2 o'clock. I want to show the afternoon session has trade opportunities and liquidity for traders that cannot trade the morning session. A lot of time people ask, can I trade, outside the morning? Because I'm mostly a morning session trader, and I'll show you, the market's always moving, right? You find something that's liquid, ES, NASDAQ, or other instruments that are liquid. Now, if it's not liquid, then you don't want to trade it. All right, so let's move to the first example. We got this double algo, minus 54 sell imbalance and the sell pullback. We've got this bearish confluence for a short trade. Let's look at the points. 1, huge supply, minus 677. That screams, right? As we looked at previous charts, we saw stuff in the couple hundreds, but minus 677, That's just absolutely huge, you know. And the thing is, if you're looking for a huge supply, I don't really go over this, but you can set that in NinjaTrader and in TradingView and in Sierra Chart. You can set that, you know, say you only want to see movements when there's like over minus 500 supply or plus 500 demand. You can set an alert for that. So that's yet another signal that can fire off besides these combination algorithms, right? So I could talk about that in another video probably outside this webinar. So we have a huge supply. We have a flood of selling. Look at this MBox histogram, and it's expanding. We see it's expanding, flood of selling. We see distribution in the cumulative delta. We see bids outpacing the offers right here. We see an effort, no result on demand. Ever no result. So I don't explicitly talk about effort, no result in this webinar. I've talked about it many times. People that are new, what it means is that we have a number, 117, it's higher than the previous wave, but it's a lower high. So it spent more and it didn't achieve, you know, a higher high. So more demand, no new high. That makes it an effort, no result on the demand. Control of the bids. We see control of the bids here and then here, right? And the bids outpacing offers. All that here. Okay. The other thing I want to point out here is that you see this total X control right here of the offers, right? We have a big blue teal dot, but there's no buying. So that's actually adds to our case that this is also yet another effort, no result, because we had, you know, the offers were in control but failed to produce much buying. And the demand that they produced was no new high. So that becomes yet another effort, no result. So we got two effort, no results here, which makes our short position even stronger here. So we get in. It's, as I wrote here, if the setup has confluence, we enter trade, maximize rewards. You know, again, you can do risk reward 1 to 3, 1 to 4, 1 to 2, whatever you feel comfortable with, or we go based on technical analysis, right? When the setup is strong and the confluence is strong, we extract more out of the markets by going with a change in technical analysis. So as we're going down, we see that selling contracts, selling exhausts, right? So at some point at this down move, you're going to want to exit. If it reaches this point and you haven't exited, you want to exit. It really looks diminished. Somebody else can say, oh, here it looks diminished here. We had a contraction. Yeah, it's true. We had a contraction here. You know, maybe somebody would exit here. Depends how aggressive you want to be. Okay. Don't get greedy. Take the profits where you can. Somebody's going to ask about this stooges. Well, this is not a combo algorithm, so it didn't fire off. But if we were to analyze this single stooges sell algorithm, we see that here, from here to here, the selling begins to contract. So it's not an ideal entry. Not an ideal entry at all. All right. So let's go to the next. So here we have a double algo of stooges and a pullback. Counter trend. And let's go over the points of analysis right here. Starting with 1, demand is growing. 226 to 84, check. Buying is expanding in the MBox histogram. It's expanding, check. We have supply but no selling. Look at this. We have a minus 241, which is relatively, you know, not a small number, and yet selling here is contracting. Next, overall selling is exhausted. Going here, overall selling exhausted. Total offer control. Right here, we had total offer control before the double algo. And offers are outpacing the bids here. It's not a huge marker in this case, but we are outpacing, right? So if we are, that means we are. Everything else lines up. It looks good. So we get in, right? How long do you write out the trade? Again, use your risk management. If you're like fixed risk, you know, 1 to 3, 1 to 4, that's fine. Or let's see what the technical analysis. So the next wave here was plus 378. Demand continues to grow. But now it's beginning to, get smaller. And the thing is, when we get to 276 here, still a good amount of demand, but we see that buying contracts. If you go down here, buying contracts. So we got on this higher high, and do you see we got a slide down on the buying? So, you'd start to look, that's potentially exit time. Okay, maybe you wouldn't even write it out here. Maybe you'd write it out here when it's, contracting here. Or maybe some people want to get out here when this contracts right here. That's being super conservative, right? You could always raise your stop loss, so you fix some profits and see how long you can write out the trade for, right? But I imagine at this 190, that'd also be an area people could be getting out on. Let's see where I'm at. So I'm done with the examples now, and what I'd like to stress at this point is the double algos and the combination algorithms are generally much stronger than the single, right? I did show in the beginning the Springs Upthrust. Springs Upthrust, I would say, are harder to trade, right? Because in this example, we're finding the top, and you have to have the ability to read the nuance is just not as strong. Like the decrease in buying is not as strong. The decrease in demand here is just not as strong, right? But I went through this example because I want people to know how springs and upthrusts work. They require more attention to detail compared to, for example, the buy, sell, imbalance plus pullback, where everything's already strong, expansion of buying, no selling, right? So these are the easier setups to trade, right? These double algorithms that are, all these combo algorithms. Buy, sell, imbalances plus one of these three, or three stooges plus another algorithm, double algo or triple algo. Okay, I want to go into a bit about NinjaTrader API custom strategies, because some people know some basic programming. You can actually, utilize my API guide for, programming custom strategies. It's on my website. It comes with sample code, so you can start building. If you want to do the alerts, that's going to be in the Gann swing strategy. And, you can create alerts that are quite complex. You can create, for example, a strategy when you've got a double algorithm and a positive cumulative delta. For example, when you got a combo algorithm here and a positive cumulative delta. But this is more advanced stuff, right? This is for the people that really want to get into it. And, you could always email me about it. Let's go on to next. Now I'm going to talk about what you get with MBoxWave. You get the trading room, okay, which is a big factor. It's basically the community behind MBoxWave. It's available to all the grandfather package and TradingView package users. Grandfather package means any of the platforms that are supported, which is NinjaTrader, TradingView, Sierra Chart, MetaTrader 4, and TradeStation. Basically, we chat, discuss, share screenshots, gain experience from other traders. It's an additional resource to get support while you're in the process of learning how to trade. The more you put into it, the more you get out of it. Be active, ask questions, interact with other traders. It's a rich mix of both experienced and new traders. So if you want to learn more, it's on my website. You can read about the trading room. And here's a snippet recently. And I talked about the trading room last year a lot in my webinar, so I'm not going to spend too much time on it. But there's this guy here that trades stocks pretty successfully using MBoxWave. So, they're always writing about, here, quick trade off spring, back trade at switch on MBox, then there's something about a red X control prior. And so there's a lot of conversations going on, and the kind of conversations we have are like this, get a lot of analysis. This guy says God bless X control, which is nice to hear because it is a very powerful indicator. And this guy says I did the same trade here. This guy's showing something else. So got a lot of stuff going on. To learn more, visit the training education page. Just go to my website, MBoxWave.com, click training and education. You can read about it. Watch. Now I've got about over 100 plus videos, including live trade videos, webinars, official webinars like this one, mini webinars, etc. Just go to my main page, click watch my live trade videos, and you'll get all my videos, including webinars. And here, they'll just showing you, I've done recently, 2 weeks ago, trading with MBoxWave Trend Filter. Here, there was a semi-automated strategy using XPace alone. So I didn't talk about that in here, but that's another use case here. How to detect trend days, and these are the ones that are red, are live trade videos in real time. If you want to watch previous webinars, which I would recommend to do, go to, again, my website under videos, click on webinars, and you'll get to my YouTube page and you'll see the webinars I've done. So I've done a couple of these mini webinars. Then over a year ago, I did the 5D order flow. 2 years ago, I did another one with NinjaTrader. 3 years ago, I did this one. 5 years ago, I did another one. I've been around for a while, so I've done quite a bit. So what is the grandfather package? So if you click on the purchase page, you'll see, like I said, I support TradingView, NinjaTrader, TradeStation, CR Chart, MetaTrader 4. What is a grandfather package? It includes all of the order flow indicators, all of the algorithmic buy-sell signals. It includes training and education, which is a huge component of it. There's lots of software out there and lots of vendors, okay? But I don't see most vendors trading their own indicators or even showing live videos making money on live recorded trades as I do. A lot of the stuff that's sold is just, that's their business. They're selling software. My primary business is trading. But I came from Silicon Valley and I also like programming. So I programmed them and shared it with others. Right? I get a lot of satisfaction from doing that. So you're getting the training and education. So I'm the sole programmer and developer and creator of the system. So I'm always going to be able to answer your questions in the trading room. And there's also live trade videos and recorded webinars. So you're getting the full package. Okay? Normally, it's $15.99. Okay? And here it says NinjaTrader, CR Chart, TradeStation, MetaTrader. I'll show you about the TradingView in a minute. The special discount I'm offering is 24 hours on the grandfather package or the TradingView package with the trading room. Discount's good for 24 hours. You go to this website, MBoxWave.com/offer. And what are you getting? Post-webinar sale is an extra $250 off. Okay? I've never given as big of a discount as I'm giving now. If you're going to get the grandfather package for one of these platforms, then you'll buy the grandfather package for $13.49. If you want the TradingView version, then you click to buy the TradingView version. The reason why the TradingView version is separate is because it's different the way the indicators get delivered. All right? Because TradingView is an online platform, so the delivery of the indicators is different, and so the way I'm able to keep track of it I need to keep track of it a little differently. That's why it's not all under grandfather package. But with the TradingView version, you'll get the same indicators, and like I showed, in my previous slide here. Where was it? You know, you're getting the exact same analysis, exact same indicators. Okay, TradingView version and NinjaTrader version. All right. So that's the webinar, and I wanted to open the door for this semi-automated algorithmic trading because I think it could be very helpful, very useful for a lot of traders. It's already come the time where we should just be scanning for setups rather than watching for charts all day. And it'll definitely help be more objective in making trading decisions. I do some scanning myself. Occasionally I trade stocks and I set alerts. I talked about it in the I've talked about it in previous webinars, but I've also talked about in my XPace right here, XPace semi-automated strategy, how I traded some options. Yeah. All right, so that's it. I hope everybody enjoyed this webinar. I hope this gives a fresh new look on MBoxWave and the capabilities and the powers of it. If you have more questions, email me. You can email me by clicking the contact button here. Otherwise, take advantage of the post-webinar sale, and I'll look forward to seeing you in the trading room then.